Hello, good weekend to you, and happy Father's Day. This is Doc Severson for the ReadySetCrypto Premium Newsletter for Sunday, June 17th. As I get things kicked off here and we look at the overall crypto market, the top 10 here, we can see that we have kind of mixed performance. Some are up slightly, some are only down maybe 1% or 2%. And so I've got four main things that I want to share with you today as I look at this market. Number one, we are not at capitulation yet for this market. And again, we can use Bitcoin here as a proxy for the larger crypto market. We're not at capitulation. So even though we had some scary news that came out over the last week, specifically last weekend, that seemed to overwhelm many of the weaker hands out there, we're still at a lower price than we were last week. But this is not capitulation. This is nowhere close to it. Number two, the weekly downtrend is still in charge. So we've been talking about this for quite some time. We have the weekly downtrend that we can see. If we look out at Bitcoin here, we can see that this is a weekly downtrend, lower highs, lower lows. It's still in charge. We're still under the influence. And what I discuss in terms of price action is rule number one, that larger time frames dominate the trend when it comes to price action. So we're still under the influence of this larger time frame weekly downtrend. So this is going to influence all of these little rallies that come up along here, which get sold into. Sell the rips. Number three, fear, depression, and abandonment of the overall market is almost there. We're almost getting there. I mean, you can almost tell when you look at these types of news articles that are on the right-hand side down here. And when they all become negative, we are almost at a bottom. This is what bottoms typically find, is that all of a sudden all the news articles are negative. We're not quite there yet. There's still a little bit of hope in the market, and as long as there's still a little bit of hope from the longer term holders, we are still going to see markets drifting lower. I know that doesn't seem to make a whole lot of sense, but I will explain in just a minute. And then number four, the undercut of 6,000 on Bitcoin versus the US dollar on big volume, that recovers, would lead to a very strong short-term rally. So we'll discuss that one as well. Okay, so with those big 4 points on the table, let's go back a little bit and discuss each one of them. So number one, we're not at capitulation yet. So as we see the price coming down, a lot of people were scared last weekend. We did have slightly higher volume, although the volume has been very low as of late, very drifty price action in just about every asset. But again, I want to remind you guys what capitulation looks like. Capitulation is when everybody says, I quit, I fold, I can't take this any longer. And this is a good example of this in early 2015, right? So most of 2014 we spent in a pretty wicked bear market. And so we can see some various capitulation points along the way, but probably the best one is represented as we got into the early days. Well, excuse me, this is actually, that is the October low. Here is the early days of 2015. Big volume spike. You can see that big volume spike here. This is the type of waterfall decline. And really the only way to explain it is to kind of go through one of these things where you can see that the price is kind of going down and all of a sudden it just tumbles off the cliff. And that's the sort of thing that we want to look for. And you can see that we had more than one of these, but this one is definitely more severe. That's the sort of thing that we want. I know I've been saying this for the last 6 months, and I know it sounds very Machiavellian, like, oh, you can't wait for the pain to come. And it's not quite like that. But if you've been through these before, what you do is you start to anticipate the pain. You start to anticipate those waterfall declines because they really, truly do signal the point where people give up. And the market, quite honestly, runs out of sellers. And that's what you want. When the market runs out of sellers, when everybody has basically sold that's going to sell, then all of a sudden everybody looks around at themselves and say, hey, maybe now is a time to buy. Maybe now is the time to get back in here. And believe me, the institutional investors that are out there that have been involved with different forms of markets and are just looking at this as another type of market, but is still a little bit overvalued, are waiting, chomping at the bit to get in on this. And they know that that's going to happen. Notice also that we pretty much had this sideways market for quite some time in 2015, where all of a sudden the bulls said, okay, thank you very much, I will take that. But the true capitulation occurred about a year into that bear market with that huge volume spike with the waterfall decline. So again, let's go back to today's market and let's reevaluate that. Okay, you can see the December highs up here, and I'm just kind of moving the chart around just so you can see this better. But here was the initial low, and yes, it was a nice high volume spike, but this is not the beginning of the recovery from the bear. This is just the very beginning, whereas Churchill would say this is the end of the beginning, right? So this is where things started to come down, and you'll see that the various lows from here haven't really provided any kind of capitulation. We're not seeing any kind of waterfall decline or anything like that. So those of you that went through last weekend and said, oh, that was horrible, you haven't seen anything yet. And I don't say that in a taunting manner. I say that like, look, when the true low does finally show up, it's going to be blood-curdling, blood in the streets. It's going to be just like everybody. You'll see this whole news channel over here will just be completely bearish. And folks like me that have been around for a while will start to get excited. We'll start to see things like, wow, okay, that is a decline. This is where we can start to get some value here. And we may even start to nibble into some of those moves. And oh, by the way, we're doing a webinar on Wednesday night, and we're going to start to talk about portfolio management, how you can take advantage of some of these types of moves. So make sure you put that on your calendar, and we will be talking about that then. All right, so again, point number one, we are not at capitulation yet. This is not even close to what we would expect to see for true capitulation. Very unlikely for the market just to stop and reverse here, unless some exogenous event comes in from left field, such as the administration says, hey, we're going on a Bitcoin monetary standard, which is unlikely to happen. So therefore, until we get that capitulation, we're not going to truly bottom out. Now, I made the point number two is that the weekly downtrend is still in charge, and that's still going to be the case. So what we're going to look for is we're going to look for swings to play to the upside. We're going to look for bottoming signals, and we're going to look for swings to play to the upside where we can get just a chunk of this. We're going to have to be aggressive because we don't necessarily expect to see the swing extend into a long-term play. So this is not really something where we're going to be, looking to hold this for a long period of time. These are just going to be swings. So we're getting close, and I'll go through some of the signals here in a minute, talking about potential bottoming and whether we're close to getting that swing that we can play to the upside. So that's just kind of the nature of the beast that we're working with right now. So number three, again, was the fear, depression, and abandonment are almost there, but not quite yet. It's still amazing to me to see media outlets like CNBC, which say that they're into crypto. They're like a weather vane. They're just bending in the wind based on whatever is the notion du jour. I mean, you'll see one day, you'll see Bitcoin is green, and you'll see the anchor on there just talking about, hey, is Bitcoin going to hit 20,000 or 250,000 this year? Then the next day when we see a red candle, you see them completely flip their narrative into, could it go to zero, or is 2,000 the next stop? And it's just amazing to watch this, is that they're providing next to no value whatsoever. And yet this is where many investors are getting their information from. And this is the point that you'll hear us bang on the table all the time. Keep your head out of the news. If you're looking for news from the Bitcoin world, find places where it's actually, where the changes are actually making. Talk to the real influencers and find out what's going on. Stay away from the mainstream media when it comes to this. So my point here is in number three, is that when you see nearly 100% consistency with the articles, that they're all completely negative, that they're basically predicting the beginning of the end, those sort of things, then we're very close to a short-term bottom. Now, the real bottom will occur. When the real bottom will occur, you will see 100% agreement that crypto is dead. And this is where most people listening to this, you will be tempted to fold in your cards and say, well, if all these people are saying the same thing, then they must be right. Well, guess what? The rule in investing is if everybody sees the same thing, that herd is wrong. And once again, it's going to be proven out. Again, you can go back to all these bottoms way back here. back in 2014, 2015. And you will see the same thing. I mean, go back and find the news from here. Go back and find the news from January in 2015, and you will find nearly 100% agreement that, well, this little Bitcoin and cryptocurrency experiment was fun while it lasted, but it's over. I guarantee you, if you find the articles from back here, you will find that nearly 100% correlation to negativity at that point. And so you will see the same thing happen every time that we have a short-term bottom in this market, and the true bottom for this, when the true bottom does occur, and we'll know it when we see it, or at least we'll know a representation of it when we see it, you will have a 100% agreement to that this is over, this is done. Here's, it's the end of the aria the fat lady is singing. All right, my last point, number 4, was the undercut. And this goes back to what I've been talking about. So right now, what you'll find is, if you look out amongst the cryptosphere, you'll find a lot of analysts that are going out there going, okay, Bitcoin 6,000 must hold, otherwise it's going to be a huge flush to the downside. And that certainly could be true. However, what I want to propose is one alternate theory, is that, look, everybody's looking at this level, everybody's looking at 6,000, and everybody's sitting there going, oh man, it's just holding above 6,000 at this point. What were to happen if we would have some negative news event come along and we'd see a big flush going down to 5,000? All of the former events that I just talked about, right? We would see some type of capitulation. We would see fear, depression, abandonment, that weekly downtrend still in charge, and we would see nearly 100% agreement in all the articles that are out there that this is it, this is done, we've broken the 6,000 level, look out. I want to provide an alternative to that, is that what I love seeing is in cases like this, and this would be a triple bottom, undercut. I want to see an undercut. An undercut basically gets the majority of investors on the wrong side if the bulls step in. So 2 things have to happen. First of all, anybody that was short has got to cover. So to cover means to buy back their short positions, and it creates demand. Number 2, we have to have institutional buying happening at this point. We have to have institutional. So all hands on deck have got to be buying as the price undercuts that level. Now, is that going to happen? I don't know. It will be a huge volume event, though. It will be a big volume event if that occurs. To get big volume, you've got to have two-way trade. You've got to have strong selling, and you also have to have strong buying. Now, if this does occur, if we do get that undercut, all I'm saying to you is that we may get a tradable bottom. That's it. It may not necessarily be the capitulation. It may not necessarily be the bottom. We will know when the bottom will show up, because we will see, and again, perhaps the best thing to do is to take you back. Once again, we can learn so much from the past. We can learn so much from the past. Take you back to this period here where we actually did start to see accumulation coming in. All right, so here was the bottom, and we started to see accumulation coming in, seeing that parabolic rise, and seeing a higher low printed. There you go, right there. That would be it for me. When I see a parabolic rise followed by a higher low and a higher high, we now have a bottom in place. Okay, so let me just talk about a couple more things here, and then I will we'll look for some new opportunities. So first of all, what we have here is we have what are known as bear flags. Bear flags in the midst of a downtrend will show up as a slightly rising pattern. And the rookies out there will all think that this is the bottom, and we'll start buying into the bottom, and they create the weak hands that have to get flushed out to the downside. They create the panic selling, which drives it lower. So they become their own worst enemies in a way by doing this. Now you can see these more clearly if you go down to a 4-hour chart and go to the right scale on a 4-hour chart, and then you'll start to see this a lot better, right? So this is a bear flag. Bear flag in the middle of a downtrend. What you're going to see is these slight consolidations, slightly rising consolidations. This is a bear flag. Then you'll see it release, and then you'll see the next flag set up. Do you think this looks like a reversal? It is not. This is not a reversal. This is yet another flag setting up. The difference between these two is you can see this. The last reversal that we saw, you're going to see, even though this looks like the beginning of a flag here, you're going to see some massive accumulation. You'll see big volume coming in. That is what a reversal looks like, where it prints a higher high, higher low, higher high, higher low. That's a reversal. Even to a intermediate swing, right? This is all we care about right now. We'll take it one step at a time. We're not looking for the bottom. We're just looking for a reversal that we can trade into and take that for a swing trade. But right now what we're seeing is nothing that shows the pattern of a bottom reversal. This looks like a bear flag. We are likely to see this release to the bottom, and then perhaps we can get into that undercut of the 6,000 level, maybe that high level, high volume type of spiky behavior that we're looking for, and that would be good. Now you might be saying, hey, he's not pulling out all the tools. He's just looking at price and volume. How good could this guy be? Well, look, studies are just another tool. Studies are just another tool. Price will tell you everything if you just spend the time to learn how to use it. Let's go to another couple of studies, though, because these can be very useful for the bottom. Now, what I talked about last week was the fact that, hey, we did get the RSI oversold signal, the same one that we got back here in early February. So does that mean that we have a reversal in hand? No, but what we're starting to see is the formation of bullish divergence. So bullish divergence will show up. Let's see if we can pull this out just a little bit more. Bullish divergence will show up when we get a lower low in price. So if we undercut that flag, we will see this pull down to a higher low. Now, where did we see this last? We saw this last back in early April. We saw a lower low on higher lows on the RSI. That's bullish divergence. That alone does not necessarily signal a long entry. Price will always signal the long entry for this, but we can start to pile up the evidence to say, hey, watch out for an upside reversal. And these will happen during the middle of the night, right? These will happen when you least expect it. You'll get up in the morning and then you won't be able to, you'll see a big rally coming from there. Now, the other thing that I'm seeing is, again, I brought this up several times, we're seeing bullish divergence on the MACD. We have lower lows in price. This is a class A divergence. Bullish divergence, higher lows with lower lows in price. So if we see another shot to the downside from here, which is very likely, then we will see, once again, another higher low setting up on the MACDs. Again, that starts to build up this sort of pressure where the probabilities are starting to crank up harder and harder that we're going to see a little bit of a pop to the upside. The last one I'm going to bring up here is the chop into Bollinger. So we talked about the fact that we had that downside pressure that pushed the chop index into exhaustion, and we also saw the price go below the lower Bollinger Band. That is unsustainable. That's an unsustainable move. It's gone too far, too fast, in too short of a period of time. So what we're seeing right now is the market doing precisely what it should do, which is to consolidate in the form of a bear flag as this chop index reaches up here again. And so what we might expect to see is that as the flag extends a little bit, then we will be setting ourselves up for potentially the next release to the downside. Okay, so that's kind of it. We've spent quite a bit of time on one chart here to let you know what's going on with this one. Hopefully that puts you in a better position where you're not completely, living on every single candle like what's going on. And again, I want to reiterate to you, stay out of the news. The more that you glue your eyeballs to the news, the mainstream news, which is written for crypto, what you're going to find is the more you're going to be part of that investing herd, it's going to be nearly impossible for you to stay on the side of the smart money. Now, one thing that I intend to do, this is my fiat broker here, TD Ameritrade Thinkorswim. One thing I intend to do is finally got permission to trade the XBT futures on here. And so if we do get that downside release, I will be all over that in the Bitcoin futures. So I intend to trade this to the downside using the Bitcoin futures. This to me is a much superior way to trade to the downside versus going short. I really don't want you guys going short by selling to open Bitcoin because the bottoms are going to be extraordinarily spiky. Remember this one phrase, tops are a process, bottoms are an event. So bottoms being an event, we'll see the price just drop like a stone for, it could be minutes, it could be a couple of hours, and everybody gets all excited, tries to short it, and then what you see is within the next day, we see that short-term bottom tie in along with that capitulation. We start to see the institutional bulls jump on board this thing, and it makes for a very, very short-term trade. You have to be Johnny on the spot, get in, get your fair share, get out with this. And that also applies to the futures. Just because I'm trading futures doesn't mean that I get a hall pass with that. That means that I have to be just as quick, but this also gives me a risk-managed way, a fixed risk way to trade to the downside without taking on as much risk as I would to sell to open. And also I don't have to pay the interest rate on borrowing those Bitcoin from my broker to do that. Okay, finishing up. I know this one's running a little bit long. And what I'm seeing here and looking at the scan, so the scan for today, if I go in here into my screener through TradingView, you can see that some of these are, a lot of times you'll see these things like going up 93%. Well, 93% gain on top of nothing is that, right? So we're seeing some of these that are showing up, which are recognizable. So like Request Network is showing up. So that's getting a little bit of a pop to the upside, Request Network. And another one, well, there's Request BTC. So that, again, is decent. And something else that I'm seeing on here, which is actually interesting and is showing a decent pattern, regardless of how you feel about this one, is actually VeChain is starting to show some very positive behavior. So if we look at this and we say, okay, VeChain, here's the initial move down, and we've started to see, right, we've broken the bear, and we've started to see what could be a potential higher low on the weekly chart. So if I go out to the weekly chart and look at this, VeChain is perhaps putting in a higher low in the weekly chart. So if we get this thing to put in a higher high in the weekly chart, then we've got something decent that we can ride. Again, a lot of you ask me, like, are you buying the dips? And we'll get into that on Wednesday night. Wednesday night will be a good time to talk about that discussion for our webinar. Buying the dips versus, if I'm a trader, what I want to do is I want to buy things that are heading to the upside. It makes it easier. I want to row my boat downstream and not try to paddle upstream. So VeChain may be something that we look at here. Regardless of how you feel about it fundamentally, from a technical perspective, this one is showing some promise. All right, folks, that is it for this weekend's report. Thanks again for listening, and we will see you tomorrow evening with the Monday edition. Take care.